All right. Hey there, everybody. Let's see here. Chris Franks checking in with you live. Uh, what is this? Today is Tuesday, the 6th of June, 2023, coming at you from just north of Houston, Texas on Lake Conroe. So hopefully you guys are doing all right here. It looks like you guys can hear me and you can see me. And you have to excuse me. I've got these allergies are kicking in pretty good over here. With all the rain we've had lately. Of course, it waited till after I filled the pool back up, right? Those of you that are following me on Twitter might have caught that, we had some work done to the pool last week, filled it up, and then, of course, this week it rains. So would have been kind of nice to have the rain coming in to fill it up. But it is what it is. Hopefully you guys are doing all right, man. So much stuff going on now, right? Especially with the SEC. So we've got everybody's fearful about interest rates, interest rate hikes. We've got the SEC yesterday, I guess it was, saying that they were going to sue that they were suing Binance. And then today, this morning, that they're suing Coinbase. So there's a lot of that going on. Everybody's continued to talk about de-dollarization. And so the question is, are the markets here at peak FUD? I mean, is this it, right? I mean, we don't see any huge drops going on, even with all this significant, news events, right, coming in. A lot of things that people are fearful of. And so, should you be worried? And so that's what we're going to talk about today. And of course, we're going to look at some charts and do the same thing, as usual. Look at Bitcoin and the DXY. We'll look at the VIX again, the E-minis for the S&P. I don't know. I think I've APE in here as well. So, we'll check and look at some charts there and kind of see what's going on. But the one thing I want to say is this, guys. Usually, when you have this significant bit of bad, what would be considered bad news, right? If you see price going the other way, if you see price rallying up, that's usually indicative of the fact that there isn't a lot of supply in retail hands, considering, right? Because if it was, retail tends to react emotionally and they would dump, right? So, it's just one of those things, guys, that until you've been in the markets a while, you don't necessarily get it. You don't necessarily understand it, right? It's something that you have to see happen over and over again before it kind of clicks in your brain. You go, oh, okay. Because until that point, you're still reacting the same way. You're still, oh my God, the news is here. Oh my God, sky's falling, right? So we'll talk about that today here. Hopefully you guys are doing all right. As I said, let's see, Bamboo's here, Brian Riley, Navlusian, Martin. What's going on, man? Hank's joined us. Andrew Bennett is here. Kimasabi says Coinbase getting served today and price is moving up. Andrew Bennett says, Coin, should we buy the dip? So maybe we'll even take a look at Coin today as well, all right? But let's start off here. The first thing I want to talk about here is this de-dollarization thing, all right? There's so much that's going on here. And guys, I'm going to tell you what, maybe some of you all even believe it. The thing is, it sounds good, right? Especially if you don't know how it all works, right? Especially if you don't understand. It sounds good. Everybody's like, oh my God, it's imminent. It's going to happen right now. The dollar is about to lose reserve currency status and all this kind of stuff, right? Hey there, Soren. Good to see you. But that isn't exactly the way it works, guys, okay? So the one thing I've talked about before is that so much of the transactions in the world, so much of the debt in the world is all U.S. based, right? So the debt is, 60 somewhat percent of world debt is U.S. debt, which means it has to be paid back in U.S. dollars, right? That's one. Two is the number of transactions the percentage of transactions that are done in the dollar versus everything else is significantly pro dollar, right? So let's kind of look at a few things here. If we look at the idea, everybody's kind of arguing, oh my gosh, the central banks are, getting rid of all their dollars, right? And all that. And so what we know is as of the fourth quarter of last year, guys, okay? So the fourth quarter of 2022, last year, the U.S. Accounted for 54%, 54%, guys, of foreign exchange reserves, complete, right? That means the rest of the currencies in the world, right, made up the other 46%. And that's according to data from the International Monetary Fund, all right? More importantly there, okay, is that the second greatest currency held in foreign exchange reserves is the euro with 19%, guys. 19%. US dollar, 54%. And then the second is the euro with 19%. The yen is third with 5%. That was as of that fourth quarter of last year, guys. Nowhere, even in 5%, is the Chinese yuan even mentioned at all, right? And yet you guys are worried about, oh my God, all these countries are saying they're going, joining the BRICS and all this, right? But here's the reality of what we're looking at there. Does that make any sense? So, I mean, this is the first thing you guys need to understand. It's not simply, oh, everybody's joining BRICS, so, oh my God, the dollar's going. It's not as simple as that. And this is the one thing I've tried to explain to you guys time and time again, right? So we can look at that because why the U.S. dollar? Because they want stability, right? And historically, we're right around where we've been, right? It's gonna fluctuate a little bit, but historically, we're well within the range of where the U.S. dollar has always been. Yet everybody's all, oh, dollar, I can't even say it, de-dollarization, right? Let me see here. And so then we can look at, again, I was talking about the transactions, right? And so as of around a year ago, okay, daily transactions as of about April of last year, there were about 7.5 million currency transactions daily, okay? The dollar was at least one side of them in 6.6 million of them. Now, this, again, is data from the Bank of International Settlements, okay? So what does that mean? That means the dollar is involved in 88% of global trade, guys. Do you see that? 88%. And you guys are worried about de-dollarization, right? If we look at that, we say, okay, well, so the dollar is at is 88% of all global trade, right? It's hard to say, okay, yeah, well, we're going to have this decline in the dollar, like this de-dollarization, right? When it's 88%, guys, of global trade, okay? And so again, we go back to this idea, okay, well, so the Chinese yuan, right, is this big scary thing. Well, at least if you don't understand what's going on, that's what you think, right? If you listen to the nonsense online, that's what you think, right? The yuan, so again, remember, the USD, 88% of global trade as of a year ago, okay? The yuan, only, and by the way, remember the what we said a minute ago about the foreign exchange reserves, right? 54% is the USD, 19% is second, which is the euro, third is Japan at 5%. The yuan, the Chinese yuan, is 2% as of the fourth quarter last year. 2%, guys. And nearly 1/3 of the yuan was held by Russia. But you guys are worried about de-dollarization, right? You guys are worried about China, right? Does that make a lot of sense? Are you guys starting to see the reality here versus all the nonsense online? When it comes to transactions, Last year, the Chinese yuan was just, remember, we talked about the US dollar being 88% of all, involved in 88% of all foreign transactions last year, right? The Chinese yuan, 7%, guys. 7%. And you're worried about de-dollarization. The problem is, again, these things, if you don't understand what's going on, these things sound like they make a lot of sense, right? Because as human beings, we're very quick to just grab onto whatever kind of fits our bias, right? And if we're worried about it because we really don't know what's going on, and some information comes out and it sounds like it's good, right? It sounds like it makes sense. Well, then we just kind of jump on it and we don't worry about it, right? But do you see how thinking that way can get you screwed up? Thinking that way is why you didn't buy the November low. Thinking it like that is why you still think that we're in a bear market. Thinking like that is why you can't get out of your own way. I recently just tweeted here on Twitter. What did I tweet there? I tweeted that, and this hurts a lot of people's feelings, guys. I probably won't get a lot of love on this post, right? But it says, most traders who try to become consistently profitable will not be able to do so on their own. It's just the way it is, guys. But they're all going to believe that they're the exception to the rule, even as they continue to lose money. Remember, guys, 90+% of new traders coming into the market are back out of the market within 90 days, having lost everything and often more money that they put in. Not just what they initially put in, but they put in more, right? And even the very few that actually are the exception will have to pay the time tax on ignorance. We've talked about this before, right? There is a time tax on ignorance. What does that mean? It sounds really rude, right? All it means is not knowing how to do a thing. There is a tax of time. It's going to take you time to figure out how to do it and to figure out how to do it well enough that you can start making money at it, right? And not just start making money, but then you want to become consistently profitable. And then you want to make enough money that you're able to really start looking at it as your sole source of income, right? There is a time tax on it. We're talking years, guys. Okay, so even if you are actually the exception, there are very, very few people that are, but even if you are, you're going to have to pay that time tax on ignorance. I was not the exception. I needed help. I got help because I decided, well, I can either sit here and try and figure it out on my own, and this is before I had all this information online, right? Or I can get somebody to help me do it. And, it cost me a little bit more up front, but in the grand scheme of things, it's going to cost me less money and much less time. So if you think about returns, you're talking about exponential returns, right? We talk about in the market all the time. The closer you buy to the bottom, right, the more exponential your returns as it continues to rally, right? So as a trader, these are the truths that are out there, and most people are not going to like this, right? So it's that same thing. It's that same sort of thinking that gets you into believing that de-dollarization is happening and that, oh my God, the dollar's about to lose its reserve currency status and it could happen just like this and all this other nonsense, guys, which again is not true, right? Again, we talk about, that it's going to happen quickly, right? But as I've talked about before, when you're so entrenched in this overall global thing, right? It's going to take time to work you out of it, right? So, what if it took, I think it takes a couple of decades at least, guys. Let's say today, let's say right now this year, it was really starting, right? It's going to take a few decades to get it out of that point, right? Does that make sense? It's not happening overnight, guys. There's too much. The dollar's involved in too much to be able to do that. But even then, I think even in a few decades, you might see a noticeable drop, in maybe global reserves of the dollar, right? But I think you'll still be eons ahead of number two. Remember, right now, number two at 19% is the euro. Number 3 is Japan at 5%. Number 4 is China at 2%. And China, a third of that is held by Russia. You see that? So, I mean, these are the things that you guys really have to pay attention to. These are the realities of what's going on there. And it's what most people don't want to accept because it's different than their narrative. Now, in crypto, it becomes even more so because everybody believes, oh, there has to be some great narrative for Bitcoin to do well. Bitcoin has to become the global reserve currency or something like that, right? It doesn't have to. It can still do well without becoming that, guys. It doesn't have to, okay? So yeah, I mean, these are the realities of what's going on out there. Now, Fibbo says the whole process of it changing over is going to happen naturally over time. Yeah. That's the thing. It's going to take time, guys. And the idea that a fiat currency is going to live forever historically has never happened, right? So we accept that there's going to be a change in status as far as global reserve currencies, right? Because nothing has ever lasted forever. Everything changes every so often, right? Every few hundred years. But that doesn't mean it happens tomorrow. Doesn't mean it happens next year. But it's going to happen, I believe. I think it's just going to take a while. It doesn't make any, this whole thing that it has to happen tomorrow or whatever, it doesn't make any sense, guys. So if you can get that out of your head, then it helps you start looking at charts clearer, right? Because remember, the big issue, I tweeted out recently that you guys need to stop paying attention to macro stuff. Stop paying attention to people who give you their takes on macro stuff. Even mine. Stop listening to it, right? Because all it does is it causes you to be emotional in your trading. You can get all the information you need to make consistently good trades from the chart itself. That's the truth, guys. The rest of this stuff is just going to cause you to be emotional. It's going to cause you to not, it's going to cause you to, okay, when you become emotional, you start creating narratives, right? Of things that haven't happened yet, but they're things that you believe have to happen. But the biggest problem that we often face as traders is not listening to the chart. We have our beliefs about what we think needs to happen, and then we refuse to see anything else that's actually happening. Does that make sense? So, again, guys, stop worrying about all this kind of stuff, all this extra stuff that everybody wants to put all this time on, right? It's like, if I get out here and I produce content, right, and I talk to you, here are the realities of trading. Here are the actual things you need to concentrate on in trading, right? The psychological side of it, the emotional side of it, charts, right? The way in which to read the charts. I can put this content out, and y'all, there's barely any interaction from y'all. But if I start talking about macro stuff and ideas, right, all of a sudden, or if I just print a chart with targets, all of a sudden that's where the interaction is. Do you see? So if you look at that and you notice that people are paying attention to things that don't really matter instead of paying attention to things that do matter, and then we also understand that most retail traders are out of the market within 90 days of entering, what does that tell you? If you want to become better at something than the group, you have to do something that's different than what the group does. You cannot sit there and keep doing the same thing as the group and expect you're going to get a different outcome. That's just, guys, that's the way it is, all right? So when you talk about de-dollarization, there it is, right? If we talk about, let me see here. If we look at the CME Fed Watch tool, talk about interest rates, right? Again, we've been looking at the idea that there's going to be this stay flat, right? No raise here on the next one here in June 14th. That's next week. And so right now, 79.4% is what the market's believing on it to hold flat. 20.6% quarter point raise. But we had Fed officials talking about holding it flat coming up here, right? We've got everybody worried about the liquidity event, right? They think that, okay, so the general account for the Treasury, now they're all of a sudden they're gonna sell, $1 billion worth of Treasuries, and that's going to soak up any remaining cash that's out there in markets, right? But people are failing to recognize that some of that money is going to come from those who are doing the overnight repo facility. They're utilizing that, right? So it's not necessarily that this is going to dry up all that money that's out there. It's just going to be a change in where people are putting money, more likely than not. At least a significant bit of it. So if that's happening, then we're not going to have a drying up of liquidity, right? More FUD, right? SEC, Binance, and Coinbase, right? Now the Binance complaint looks pretty bad, looks pretty damning, right? But here's the thing that most people, unless you've been to law school, I don't think people really recognize. The pleading, when you put in your complaint, right? The idea is to make it look as damning as possible. You need to make it look like there's no other thing. I'm not sharing my screen, guys. Relax. I'm talking to you right now. But the thing about pleadings, right, is that you're going to make them look as 100% that you're right as possible. The truth is, when you get to court, though, you have to believe, so a lot of times in the pleadings, they're gonna say, okay, well, these are where they're violating, right? So the SEC is gonna go up there and say, okay, well, CZ and Binance violated this, and this, right? Most likely, they don't have the proof that they need to reach the level of to reach the level that they have to for the court to say, okay, you're correct, right? That they did this. And so it's once the case actually gets going, and you have all these other times to start pulling in some evidence, right? Trying to find some evidence. You have to have some kind of evidence. You can't just say, oh, they're doing this. You got to have something. But just because you have something doesn't mean it's enough to actually have the judge find that you're correct, right? So people read the pleadings, say, oh my God, Binance is in so much trouble, and they may be. But the SEC still has to go to court. They still have to prove these things to the extent required by the law, right? And then they have to actually not settle. And the reality is, in most of these kind of situations, there's a settlement. Why? Because attorneys know that when you go to court, there are absolutely no guarantees at all. I don't care how strong you think your case is. Once you get to court, it's out of your hands. And the other attorney may be greater at getting people to believe them than what you are. They may provide a new and novel way to look at it that you didn't think of, that the court will look, okay, yeah. So this isn't what you're saying it is. It's actually, we need to look at it this way. Remember, a lot of countries in the world now are passing all these, in relation to securities, right, are saying, okay, well, crypto is different than other securities. The U.S. is not. The U.S., the SEC is trying to say, okay, they're the same thing. And maybe they'll get the court to agree with them. But they have to do all that work, guys. And it's not going to happen overnight. It's going to take years. What, the Ripple lawsuit has been, 4 years in the making still? How long did it take with Tether? It was a few years, right? And then they just settled, right? So there's so much going on there. But the layperson tends to see that and they go, oh my God. They believe that everything the SEC is true. And whether it is or not isn't even the biggest hurdle. It's, can the SEC prove it to the extent required by law? So are we at this peak FUD area? Because we're about to look at the charts, and all of a sudden, Bitcoin's rallying this morning. It had a knee-jerk reaction to the Coinbase news. It's rallying now. It's almost recovered, I think, what it was dropped yesterday, or it's getting near that, on the Binance news. If it's a bear market, you expect price to continue falling, right, on bad news. But when you have price continuing to rally, even with bad news, it usually tells you that supply has moved from the short-term hands, right, into the long-term hands. Because short-terms can't sell into it, right? There's not enough to sell into it. So, I look at this and I see, again, from the psychological side of it, I see a lot of stuff happening, a lot of bad news, but I don't see a proper reaction in the market that would suggest bearishness right now. Okay? Crypto Critical says, then of course there is the appeal process, which takes forever. Yeah. So let's say they go into there, and let's say they don't actually come to a settlement. Let's say they continue through, right? That's only step one. Let's say SEC loses or Binance loses. They can appeal. Now we have to go through the whole appeal process. Guess what? If the SEC or Binance, I mean, even if the SEC loses, they can appeal it, right? And then it gets the appeal process, right? And you get to the appeals court, and then you lose there, whether it's Binance, Coinbase, or SEC, right? They can then attempt to take it to the Supreme Court as well. So what is getting done right now ends up being what? Something that could take years to ever get completely figured out, right? So, that's kind of where we're looking at this. So let's kind of bring this up here. Let me see. Well, let's start right. I guess we'll start with Bitcoin here. Let me pull this up. Let me share this screen here, guys. I hope I'm giving you something to actually think about other than the nonsense. Because if you're not catching it, life's just going to be tough, guys. Okay. There we go. So this is what we're looking at locally here on Bitcoin, right? Now, so what's important to note here? Well, what's important to note is we have this range right here, right? Now, we have this range. And what happens here? We can note we got a lot of volume coming in right around the lows, and then we rallied up to the high here, right? Now, what happened here coming down? Volumes dropped off until we got right here at the lows, and then we got a spike of volume. So we had demand show up right here, right? On this big bit of volume. Throughout the range, we're in phase B here, and we have volume back and forth, up and down. But what we notice is here at the bottom, demand shows up, right? Not to be disappointed. Gets down here again, demand shows up. Look at these two candles, this one and this one right here. Look at the change. Exceptionally greater volume in the second one and much smaller candle spread. So we create this small range here. We get a spring and a bounce up, right? So if we can jump in here, let me kind of jump in here a bit. You see this local range right here? Look at this. Going through the range, volume drops off until we get to the spring. Rallies up and follows through. Volume remains high. Large candle spreads break as you get your jump across the creek. Rallies right on up, right? So where's the 15-minute on here? That is right here. Look at this. Breaks out above it, right? So if I look at here, I'm going like 1, 2, 3, 4, maybe 1, 2, 3, 4, 5 or something like that coming out there, right? But this range, clearly accumulation here based on price action and volume. You got your spring, you got your test of your spring, where you get to lower volume. That's what you want to see. Higher low, lower volume. And you get this rally up, jump across the creek, large spike of volume, large candle spread, breaking out through supply. Rallies up into the 15-minute pivot, pulls back, breaks out above it now. I mean, I think if you're not long from this area, I think you're wrong right now. Let me kind of pick this up here. So with this local descending channel, we had this breakdown on volume through here, small range underneath, and then boom, big volume breakout right back up into it. In terms of the larger range here, again, we have this big bit of volume as we come into the lows here, which is more than the volume at what would be the selling climax over here, right? So it's a bit of a terminal shakeout, which creates its own local range. Same thing we talked about, guys. Same thing we talked about right here, right? Because we had this range right here, And we had the terminal shakeout here, the local range below, and then the impulsive breakout back up into it. It's the exact same thing that's happening on that smaller time frame. So what am I looking for? Well, impulsive breakout above, by the way, you can notice that we've got this larger red wedge here, right? By the way, as we go down through this, notice volume's basically just trailing off as we come to the low here. Sideways is where we're at. It trails off again until we get to lows. Then we're kind of some sideways. But overall, you can see that volume's kind of just falling down through this, right? And this, by the way, is Coinbase here. So, you see this overlapping price action, smaller candle spreads, right? Volume dropping off, especially in these ranges here, right? I mean, you should be looking for this to rally up. I want to see an impulsive breakout above this descending, well, both of these descending channel EQ areas right here, right around 26,450 or so. Impulsive breakout above that should give us a target of this large red descending range, which might get you up there, or descending channel there, might get you up around 28,000, 28.1, somewhere up in this area. Impulsive breakout here should lead to here. Impulsive breakout above that should send us up to new highs. By the way, notice, where did we find support? Right here where we found resistance. But yet y'all want to be bearish here. How much sense does that make, right? Fibaswani says, for you moving average peeps out there, the weekly is back above the 20 SMA. Hank says, we're all good. Jim Cramer just tweeted, if you have money with Binance, beat your fellow investors and get out of it as your assets are commingled. First out might get money. You know how, unfortunately, Jim Cramer just has not had a really good run, especially the last few years. With banks, with crypto, really anything, right? It's a crazy thing. Deadly123, what's up, man? Good to see you checking in. Andrew, what's up? He says, watching the Bitcoin weekly on the pivot and the 200 SMA. Yeah, so here's the other thing. We still remain right here, right? Now, here's the problem. This is the weekly, okay? And people will look here and go, oh my God, we're below the weekly. That means it's not holding. No, look, you can wick below it and still be held. It's continued to do so. Right now, it's only Tuesday. We've got until Sunday for this to get back above that 26,700 and some change area. Look what's happened here on this. Look at this decline. All overlapping, right? Look at volume dropping off. Listen up, guys. Here's something, if you don't know it, pay attention. When you have overlapping price action and a decline in volume, that suggests it's corrective. When you see like right here, right? You see how this kind of volume's getting higher and higher as we're kind of going through this? That is a trend, right? Where you see larger candle spreads and larger spikes of volume along the way, that's a trend, okay? But when you have overlapping price action and declining volume, that usually indicates a correction. So, Eric Quinn says Kramer's biggest, what'd you say there? Kramer's biggest flex is NVIDIA, possibly the only good thing he's mentioned in the last 5 years. Oh, Lord have mercy. Hey, listen, guys, make sure that you subscribe to the channel wherever you're watching this at, that you follow me. You know, if it's Twitter, follow me. If it's YouTube or Twitch, that you're subscribed, that you like, that you comment. Come on, guys, do these few things for me, would you? Appreciate it. It just helps it get out there more in the algorithms. So, yeah, I mean, do your part. It's free info you're getting here, guys, right? Kramer's not for the people. Should we long now? I can't tell you when to long. I don't know your situation. I think personally where we're at here, there's a lot more reason to long than not off these lows here. I think just in general, I don't know anybody's specific situation. I can't comment on that. But in general, with everything that's going on here, this sure as heck looks a lot like accumulation. And so we should at least rally up here to 26.7. If we're getting out there, we're probably rallying up to the hourly pivot at around 27,370. If we're getting there, most likely we're going to break out higher from that. It's always steps, right? But on the smaller time frames, it sure does look like we're getting there. We can jump back out to these larger time frames, right? Look at that 12-hour candle. Look at that bullish engulfing candle. If you look at the daily, dip down lower here, basically just a wick right below here. I told our members yesterday that this might be the bottom, but again, we would probably, that I would not be surprised at all to see us have like a wick down below the S1 pivot to finish it off before it rallies up, and that's what we got today. You can see that we've just kind of rallied into the previous support area here. So if we can push up into that, all of a sudden, we're getting into the liquidity, right? We're getting into the higher volume node area. Makes it easier to travel through it because people are there willing to put their money in, right? This isn't wave 5 coming. 15-minute? Probably. Yeah. I mean, we've rallied up quite a bit off that low on the short time frames. So, again, what I was mentioning earlier about the count here, yeah, I would probably think that. You could pull back. So we'd probably get like a 1 and a 2 and then get a 3 pushing up further. I'd be looking for that. Yeah. Would that be considered tweezer bottoms on the daily? Yeah, that's pretty close. The closer these the wicks are to each other, the stronger that is. But yeah, I would consider that tweezer bottoms right here. They're pretty close on that. This daily, the further up this closes, the stronger, the more likely that bottom's in. So like if we could see this, well, we got about another 6 hours and some change or so here, 7 hours and some change. If we can see this closing up here closer to 26,800, I mean, that would be significant. Of course, there are no guarantees in trading all except that you're going to lose money at times. But, man, you kind of play what's going on in the charts there, guys, right? So, yeah, Hank says as long as the wedge is pointed down, he's not worried. Yeah, again, you got the kind of this wedge here. This is what would be the best way to draw this wedge right there, and then right here. See this? Let me see if I can kind of make this bigger. Whoops. Oh my gosh. I'll try this one more time. There we go. Go something like that. And let me change the color here. I don't know. That blue sticks out. Let's do that. So yeah, I mean, if I'm drawing the wedge, this is where I would draw it from. So you got the high into the low, into the high, into the low. The red here. Some people will draw it from back here, but I'm not a fan of that because you usually want to draw. If it's a descending wedge, you usually want to start at resistance. If it's an ascending wedge, you usually want to start at support. It just tends to work out better. But nonetheless, I mean, if I'm looking at this is the wedge I'm seeing here. And so you've got this consolidation, volume kind of dropping off until we get to the low here. And now, boom, we're breaking up there. So, again, I don't, everybody, God, I don't know. Everybody gets very emotional very, very quickly when price changes, right? And so it's that same thing. I think I talked about this last time where we can talk about, people are like, oh, well, I'll say, okay, well, we've well surpassed the general definition of an accepted, generally accepted definition of a bull market, right? Which is, again, a 20% rally after a long decline, right? We had a year-long decline. And then you have at least a 20% rally in at least 2 months, okay? So it has to be 2 months long and it has to be at least 20%. We're going on 6 months and we had rallied 100%, right? So we're well above what's actually considered a bull market, right? This is by the general definition that's accepted. And people will still say, well, I don't know. I won't believe that until blah, blah, blah. Well, I mean, how can you argue with something like that? I mean, it's emotional. We say, here's the definition of a bull market. You say, well, no, I'm not going to accept that. Well, just because you don't accept it doesn't mean that's not what it is, right? But this is the thing with retail traders, right? This is the thing that you are dealing with every day when you're discussing charts with people. That emotion is constantly there, constantly kicking you, and it's worrisome, right? It makes it hard to have conviction in what you're saying, right? You're always like, well. And that leads to this whole idea that traders generally don't become successful at trading, right? You never kind of get beyond that. You don't know how. You don't understand it. You don't see it for what it is. Even when somebody points it out, you argue about it. No, it's not. No, it's not. Well, I mean, see what I'm saying? When the Fed announces the pivot, the DXY will drop, right? Well, I mean, yeah, if the Fed was to pivot, yeah, the DXY should head lower. Yeah. I mean, we can't guarantee that's what's going to happen or it's going to happen immediately when it happens. But yeah, generally expected, if the Fed's going to loosen, lower rates, loosen monetary policy, right? When those things happen, that's negative for the dollar, right? Because it's more liquidity. It's easier liquidity, right? Easier credit. So yeah, you generally would expect that, right? Chef Webb, what's up, man? He says, I heard an influencer who supposed, I can't even say it, worked at a hedge fund say not a bull market until the new all-time high. Never heard that before. Yeah, that's not how it works, guys. That's not how it works. Imagine if you were waiting until the new all-time high before you felt comfortable enough to get in. Oh my God, you would miss the entire run from 15 to 70,000. 30, 45, 60, 75. It's almost, you'd miss almost a 4-time return. Obviously if you grab the absolute bottom, but I mean, that's the reality of that, right? Does that not make it? It doesn't make sense, right, guys? It's not. But I think that's the way a lot of traders actually think, and I think that's why when they say, "Oh well, I think we're still in a bear market," I say, "Well, it doesn't matter what you think. Here's what a bull market is. This is the generally accepted definition. It's what the SEC and everybody else uses, professionals use, right? If you're going to argue and say, well, I don't think so, or I won't believe it until I see this happen. Well, all you're saying is, listen, Chris, my emotions dictate my actions. That's exactly what you're saying. And again, me saying this is probably hurting a lot of feelings right now. People are probably going to get really defensive hearing me say this. But why? We're just bringing up reality, because that way, if you understand the reality, it allows you to make change. You can't change if you don't face it, right? So yeah, Hank says we had the same nonsense in 2020. I'm not sure which nonsense he's referring to, but I think he is referring to the COVID drop there in March of 2020. So yeah. Bramborg, what's up? Says, hey, Chris, I'm a noob with a macro question on price action. I thought China lifting a ban on crypto. Let me kind of pull you up here. I thought China lifting a ban on crypto would have been bullish for Bitcoin. It seems like the price didn't care about that. How do you approach things like this? Well, the first thing is, I don't worry about news events, right? So the way I understand the world and the way I understand the charts is that news events are secondary, right? Everything's already in the chart because it's based on the way that people behave. And people show how they behave by whether they're buying or selling, right? But not like immediately. We're not talking about knee-jerk reactions, right? We're talking about how has it been since, for instance, I would look at the chart and go, okay, well, how has it been around June of last year, and then around November of last year, and then since then, right? But it's nothing that's simple to get. Basically, social mood leads to social action, which leads to what you see on the charts. So if that's a bullish thing, then we're going to see price rally up. Prior to it, right? The trend is established. The ultimate, the macro trend is already establishing itself prior to the news event, right? Because people will position themselves, right? The big thing about markets is asynchronous information. Somebody, Warren, Senator Warren, right? Boy, she's an amazing trader and investor, right? She seems to nail those tops and those bottoms, right? Maybe a little bit of insider information going on there since she sits on a certain committee, right? And so, there's this asynchronous information out there. But more than that, there is the overall, how do people feel in general? How does society feel? What is that social mood? And if the social mood is down, then you're going to see negative interaction with markets and businesses and things, right? You're going to see businesses producing less, laying off people, consolidating, right? If people feel good, if they feel excited, if they feel happy, you're going to see more buying in the markets, right? You're going to see businesses expanding. You're going to see them hiring on. You're going to see increasing production, right? And these things happen prior to the economic numbers. The economic numbers come out as a result of these things happening. Jobs data, it tells you how much has jobs grown or declined, right? I mean, these are all lagging, but everybody trades based on it. But the trend's already there, right? Because these things have already happened. So I don't tend to look at news events or, like the China thing or whatever outside of what's going on in the charts. And you don't have to either. I think when you start looking at that, that's where you make the mistakes because you become emotional. Like you said, I thought it would have done this, but it doesn't seem to be doing that. So what does that mean? But you don't have to worry about all. You can just learn to read the charts properly. But learning to read the charts properly means understanding how and why they are the way they are. And most people don't understand. You guys, there's a lot of big, accounts out there that trade like a really, really just like this kind of way, right? Really, one single thing, that's what they do. But they have no real understanding of what's going on with the markets. And you'll see them try to pontificate on economic events, but without any real understanding of what's going on or how it all comes together. See, that's the difference between what we do and what everybody else does, right? Everybody else just wants you to believe that you can, use their system and magically become this excellent trader. There's so much more to it. There's so much psychology and emotion in it that you have to deal with to figure out. And that's before you even get into why and how the market moves the way it does. Does that make sense? But again, what do people who come in, what do retail traders come in when they want the market, right? They want to learn how they can become millionaires tomorrow. They don't really want to, they just want to say, listen, show me something that I can look there and I know all I have to do is buy here and sell here. And that's all I have to do. I don't have to worry about risk management. I don't have to really understand what's going on. I just have to look for this to happen and I buy and this to happen. But, even if you create a systematic approach to trading, where you do that, right? Where certain things happen and then that means you buy and then other things happen, that means you sell. You still have to understand proper risk management. You still have to allow it to play out without your emotions keeping you from moving stop losses and stuff like that, or taking profits too early or not taking them at all when your system says to do it, right? There's so much more involved in trading than what anybody out there really tells you guys. And they lie to you. And sometimes they lie to you because they know, but they just want you to buy what they're selling. Other times, they lie to you because they don't even know that. They don't even understand that, guys. There are so many bad takes in social media. So many. Trading and macroeconomics and all this stuff, monetary policy, all that really, really bad takes. And you guys, you don't know what you're doing. So you go in there and you hear them and they seem to make sense and then you become really emotional. And what the hell, man? You can't seem to get consistently profitable, right? Because all that nonsense that keeps coming in there. Errol Quinn says Apple quietly made a new all-time high for a day or two, but I didn't see much news about it. Kind of strange. Well, they let they had their goggles. What they're kind of silly looking, but it's that whole immersive reality kind of thing, right? Where you can kind of see what's going on out here, but then you've got all the other alter reality stuff. I can't think what the word is right at the moment. That's why I went up there. I mean, I went up there because that's where the trend was going, right? So yeah. Looking at the channel you have on your chart and notice how you can still draw a trend line on the declining volume, suggesting it's still consolidation. Yeah, again, as we look at this, I mean, again, the volume of price action really kind of say it all, guys. But unless you understand, you're going to argue about it, right? But that's why, honestly, that's why you didn't buy here, right? And you didn't buy here. And you didn't buy here. And you probably didn't buy here, right? And you probably bought here or here. And you've continued to buy here and here, right? But that's why, again, You probably didn't sell here or buy here, right? Remember up here, I said that's the local top. Had the target right down here at this swing low area, right? Which is about where we hit. Rally back up again. And, most people bought in this area again and then held as it continued to go down, right? I mean, it doesn't mean that you can't say, okay, well, we can look for a reason for it to go long here, but you have to have those validation levels as it builds, right? And you have to have your invalidation levels. And so if you don't hit your validation level, but you hit your invalidation level, guess what? It's going down further, right? Doesn't mean you can't try again here or here, but you absolutely have to have those validation and invalidation levels. You have to understand how to apply them correctly, right? Bramborg says TA takes time to learn and figure out what is an edge and isn't is also what I'm trying to understand. Yeah. I wouldn't listen, man. I'm going to be honest with you. The word edge is thrown around like it's something right now. Listen, your real edge is risk management, proper risk management. Okay. I'm going to be honest with you right now. That is the secret sauce. That is the holy grail. That is what separates you from everybody else as a trader, is proper risk management. Okay. This other thing about, I can look at the market this way and it's an edge. Again, you can learn a system and apply it and just do that, or even be somewhat discretionary with that system, right? But the real thing that's going to determine over time whether the biggest, I think, component that's going to help you recognize, help you become successful over time, right, is proper risk management. Because you're a human being, which means you're infinitely fallible, inherently infinitely fallible, right? That's just by design, guys. We can't possibly know every decision and the outcome, and this big decision tree, leads to another decision, leads to another decision. We can't possibly know all that. So we have to protect ourselves from ourselves with proper risk management. And that means you have to get comfortable with losing money, because you're going to lose money as a trader. Don't care how long you've been doing it. You're going to lose money. 20 years, 30 years, 40 years later, you're going to get in bad trades. But it's that risk management, it's that understanding, and then that proper application of it consistently. That means that when you do lose, it's very little, and when you win, it's a lot greater. So you average out much greater in your wins than your losses. That's what trading is, guys. It's not about, I got some 80 or 90% win rate. It's not going to happen, guys. And if it does, it's going to happen for a period of time, and then that's it. It's not going to be, you are not going to find something where you are consistently 80, 90% win rate for years and years and years and years and years. Anybody that's telling you they are is lying to you. I'm telling you guys right now, because every market is different, whether you're in a bull market or a bear market or your consolidation, right? 70% of the time, price moves sideways, not up, not down, sideways in markets. Okay. You're going to find, as you are trading longer and longer, that you're going to have different ways that you trade a bull market than you do a bear market, and different ways that you trade sideways. Does that make sense? So yeah, I mean, so if you're going to learn technical analysis, you can do it. The ability is there. It's just, are you going to take the steps that are required? Most people aren't willing to do that. Most people are not humble. You can see online, social media, there's a lack of humility, right? People jump out right away. It's all about name calling and shaming and whatever. When somebody, when a trade doesn't work out exactly as somebody said that they thought it might, right? But when you see that, you know that person is not a very good trader. Because if they were, they would understand. They've been through it enough times that they understand that what they're doing is completely stupid. It makes no sense, right? And they're not going to do it. I mean, so, these, again, are the realities of trade. These are things that people aren't going to tell you, because they want you to just blindly buy whatever they're selling, because they're making their money on that churn. They're making their money on those purchases of what they're doing rather than on their trading, regardless of what they're trying to say otherwise, right? I mean, if you're selling something, you got to have profits. I mean, what's the use of selling it if you're not going to make money off it, right? That's fine. but it's the way in which they approach, right? And these are things that you don't pick up until dealing with it over and over again. Same thing with the markets and what's going on here, right? So yeah. Let's see here. Anyway, yeah. So okay, so we've got that. What's going on here locally? Yeah, look at that. Bitcoin just continuing to, just continue to rally up here. Like again, accumulation right here, rallying up, filling in the gap here. We should get up here around that 26.7 or so. Just prior to that right here, I mean, I could see a rejection potentially in here. Remember, this area around that 26.450, 26.500 kind of area here. I want to see an impulsive breakout that remains above that. If we can get that, I'd be looking up here at the descending channel resistance up there, the 28,000 and some change, right? Now, if we look at the DXY, we had this great drop yesterday and then it turns into this big rally today, right? Now, if I'm looking at counts, again, this is what I continue to talk to you guys about. I think we got 5 waves down, and that's either 1 or A, and then 3 waves up around a 38.2 retracement here into the daily R1 pivot right now, right? But basically, wave 2 or wave B rallying up to where wave 4 is, and that's usually where we expect it initially to target, right? And then I think we've got 5 down, and then an A, a B, and a C as a flat here, okay? Ending off maybe in an ending diagonal here, right at the weekly pivot, right at, this wick up here at the 78.6 retracement. Yes, it looks like the daily may try to cross bullishly, but again, we are also above the oversold. It hasn't crossed bullishly yet, hasn't closed on that, right? Weekly, we are almost topped out. We're about topped out there and overbought. Other things to look at here, we're right here. We're having trouble right here at the weekly pivot, right? So again, we're looking for this rejection in this area, but if it does break out above this swing high here, this 105.870, I would look at this as potentially being a 1 or an A, and then A, B, and 5 up here for C. And we might see 107 or 109 with that. Right now, I don't think that that's going to happen at the moment here. We'll have to wait and see if it does. But if wave 2 is complete here, that gives us a wave 3 minimum expected target down here around 95.8. Wave C would equal wave A, 100% of wave A, right around 91.765. So again, if we can get this rejection here, come on back down, those would be the 2 immediate targets I would be looking at on that. Does that make sense? So right now we just need to see, do we get this rejection in this area? The weekly, again, we've got this doji right at resistance. Generally, when you have that, that suggests a reversal, but we still need confirmation. We need to see a nice, supply spread candle printing over here on the weekly. Daily, again, still finding resistance right below that that pivot, right? Your 4 hour, we're right here. Potentially A, B, 1, 2, 3, 4, 5 here, right? And then maybe 1 and then a flat here for a 2, because look at that 4 hour there. But we need to see the drop below and to continue down, right? Right here, it looks like maybe 1, 2, 3, 4, 5. But again, we need to actually see it do it, right? We need to see that follow through in that. So that's what I'm looking at. That's what I'm looking for right now. Oh, excuse me. So we'll see what happens here. Again, if we do break up higher, it is possible we could go higher there. But if we do break out above that swing high right beyond that daily R1 pivot, again, 107, 109 potential targets on that. So we'll see what happens there, right? But if we can get this breakdown here, especially below today's low there at 103.315 here on the ICE exchange on the dollar futures, that carries it there below, below that and below that daily pivot. Well, all of a sudden it's really starting to look good for further downside. Breaking down below this wave B down here at 100.52 is going to add confidence to this 1, 2, and then that 3 with that target down here again at that 95.8 area. If we look at dominance here, USDT dominance, I think it's possible we've got a 1, 2, 3, 4, 5, and then we have a 1 and a 2, and then it looks like 1, 2, 3, 4. I'm sorry, 1, 2, 3, and then ABC, ABC, 1, 2, 3, 4, 5, right? So it looks like a flat here for 4, maybe. 1, 2, 3, 4 is a flat. 5 will get us down here near this swing low, down there around that 5.65 area, maybe. And that would be wave 1 of 3 heading down, right? And so obviously if that's heading, that would suggest that Bitcoin's going to head up right there, right? So yeah. Recession coming means Fed pivot, right? Recession will make Bitcoin dump. If there's a recession, see, here's the problem. It looks to me like the markets have already priced in this idea of this recession. Because remember, markets are forward-looking, right? And everybody's been talking about recession for over a year now, right? And we haven't really seen it yet, right? We continue to see strong job growth. CPI, even though it's coming down overall, that's good right there. But there hasn't actually been that recession yet, right? Or some people may argue that we're in this soft kind of recession right now. But it's hard to argue that when you still have this strong job growth, right? So will we hit a recession or not? We'll see. But again, if you're thinking about that economic data, again, you're just going to cause yourself to be emotional and to not pay attention to what the charts are actually saying, right? People have been scared about the recession since last year. So again, they didn't buy the beginning of accumulation here in the June low. They didn't buy the absolute low price here in the November low. They didn't buy the pullback here in March, right? Some people may have finally bought here at the top, but now they're underwater, or they got out at a loss, or they were liquidated as price continued to pull back here, right, locally. But it's because people are scared because they think that recession is coming. Because the idea is if there's a recession, then Bitcoin will drop. And it's possible, sure. Bitcoin seems to act as a risk-on kind of asset, which means it does well when risk is on, doesn't do so well when risk is off. But honestly, the same thing I've said for years now is we've never actually seen Bitcoin in a recessionary period. I mean, other than we saw the quick drop there in March 2020, right? So I think, that's still kind of out as what's going to happen. I would generally expect, because when we hit a recession, as I've shown you guys before, usually everything drops at first, right? Precious metals, everything, just about, right? Stocks, all that. So it would be expected Bitcoin would do the same as well. I still stand by this idea that Bitcoin would rally. Usually precious metals like gold and silver are going to rally before the bottom's actually in the stock market. And I think Bitcoin has a good chance of rallying even before precious metals do. But at the beginning of a recession, everything goes down initially. Yeah. Right? So when recession comes, which asset should we buy? Gold. Again, at the first bit of recession, generally everything's going to go down. If you're worried about the stock markets go down, then usually you're going to buy bonds, right? If you're worried about stocks going down, then bonds should go up, right? When you're in recessions, generally, you buy things like defense-related stocks, healthcare stocks, stuff like that. And then usually there's some type of business. Each recession is different, but usually there's some type of business that does well. For instance, 2008 into 2009, the dollar store went up while everything else was kind of going down. Yeah, I mean, there's always outliers in there, but, generally if stocks are going down, you buy bonds, right? If you're going to buy stocks, you're going to focus on, defense or healthcare, stuff like that. Yeah, if you're talking about U.S. recession, you'd be talking about U.S. bonds, yeah. Any new thoughts on whether the grand super cycle top comes in 2023 or if we still have a few years before that event? Eriquin, man, that's a great question. I think the way this is playing out, I think this extends. I I don't see any reason to believe that it's going to hit a new all-time high before halving. Now, could it? I mean, I'm not saying it can't, but again, I think I think the best we probably do is like the 50,000 or so before halving, and then we pull back into halving, and then new all-time after that. So yeah, so that's what I'd kind of look for on that. VIX remains below 16. It's at 14.28 now. 28 now. If you guys will remember, last time I talked about this, I was telling you that usually when we're below 16, when we hold below 16, that's usually bullish. Usually we see the market continuing higher. And so, again, that's kind of what we're seeing here. This is the E-minis for the S&P. So let's kind of jump over here and actually see the chart. This is what we've got going on. I think it's possible we've got 3, 4, 5, and then 3 back, and then 1, 2, and then 1, 2 here breaking out. So 3 of 3 of 3 coming here maybe. What we're still looking for, as I've been talking about since mid-August, is a break above that. We need to break above this swing high. 43.2750. We're almost there, right? We're within, right now, we're within about 50 points of that or so. If we can break out above that, that kind of locks in the idea that we've got an A, a B, and a C here, as I've been talking about, because this can no longer subdivide lower, which again has me thinking this is maybe a 4 here. But again, remember, guys, this can be ABC down and then ABC up toward the all-time high, and then 5 more back down toward the low here, or even a little bit lower, to print a flat for wave 4, right? Or you can have ABC down, ABC up, ABC down, ABC up, ABC down. You get A, B, C, D, E as a triangle before you break out higher, right? So 4 could be done here if this is even 4. 4 could be done here, or we could be building a flat correction, which will grow up to the all-time high and then pull back down to the low here, and then go up in wave 5. Or it could be a triangle continuing to consolidate here to finish off wave 4. So we'll see. We'll see what's going on there. Jim, what's going on? Says most advertised recession is not coming. Yeah, again, everybody is expecting to come, and everybody is not buying into the market from the lows because they were worried about this recession that still hasn't materialized yet. Now, that doesn't mean it can't materialize, guys. But again, markets are forward-looking. And so with the way they continue to act in spite of everything's going on, I mean, I think it's probably priced in quite well. So we'll kind of see on there with that. Let me see here. Ape looks interesting to me. So there's this wedge here, and it could be, a 1, 2, 3, 4, 5, right? And then an A, B, C. What I find interesting is you had this big drop on the spike of volume, right? And then today we're almost bullish engulfing so far in the days, still got another 7 hours left. Similar volume there. We had bullish divergence here on the daily from around May 11th until yesterday, right? We have, this looks like a wedge kind of coming down here, right? You could even probably draw the wedge like this here. But basically, this becomes a throw under of the wedge. And you expect a strong rally back up, and here we are with that, right? And let's see, if we actually do that instead of the other one here, let's just say this is the wedge here. Based on the height there, you've probably got a target, as it should be, up at the beginning of the wedge, right up here at around $4.50, $4.70, right around there, right? So yeah, I mean, if I'm looking at this, I think there's at least a possibility to rally up toward that $4.50 kind of dollar area. Does that make sense? On Ape here, right? Fibbo says, what'd you say there, Fibbo? Your LTC chart hit a buy at 86.95. What do you see? Let me see. I think I got a Litecoin chart up here. So Litecoin, I was looking for the pullback. We got that. I like the candle here. I like that large wick down into support and rally right back up to support here. I mean, yeah, I think right now, as long as this is holding right here, I think we're good to go long on that. And if we can break out higher, I think we kind of head up here toward, oh, wait, this is Litecoin Bitcoin. Sorry, wrong chart here. Oh, I hit the wrong one again. Doggone it. This is the wrong chart. Where is my... Over here. This is what I'm looking at. We'll try this one more time, guys. Again, great wick down into support here. I like that pullback into support. I mean, if I look at this, it looks like a 1, 2, 3, 4, 5. This could be a flat here or a 1, 2. But I mean, we got this. This is the 8-hour here, right? We've got this drop down into oversold and the bullish cross, and now the breakout. Again, if we look at this, we can look at the difference between the two. Same thing we're looking at on Bitcoin here, these two candles. So you have this large supply is in control candle here, closed at the lows, big, large supply spread candle there, large spike of volume, and then significantly more volume, leaving a large lower wick and a rally back up the other way. So a lot more effort and absolutely no result. As a matter of fact, it flipped to demand getting result on that. Finding support right around, is that the daily pivot? Let me make sure it's right around. Yeah, that's the daily pivot right there, right? So if I'm looking at that, excuse me. Yeah, I mean, I think we rally at least up into the kind of this 100 area, 102 area. And then I think maybe we'll get a pullback and then rally up higher there. So I could see potentially something along the lines of this maybe. Kind of getting up here, pull back, and then kind of head up there more. Oh, yeah, something like that. That's what I'm kind of looking for on that there. You're saying on the 4-hour. Yeah, again, 4-hour, again, same idea here with the volume and the price action. Find support right there. Wicks finding support on the S2 pivot on the hourly. Overall, candles finding support on the daily pivot. We broke down and closed right back up above it. Tried to dip down again. Just caught a bid here, rallied back up, pushing up through the S1. I mean, initially you could look at 93.20 as a target. That'll get you the hourly pivot. But again, I think you kind of move on up there to 100, 102 kind of area. And then pull back on that. If I'm looking here, looks like maybe like an A, B, and then a 1, 2, 3, 4, 5. So C. But we'd have to get above $96.52 to confirm that. But it looks like maybe A, B, and then 1, 2, 3, 4, 5 there. But yeah, I mean, RSI oversold. Stoke RSI bottomed out and oversold. Trying to get some rally up there. And I like this rally up to resistance right here, this previous resistance. Pull back, catch a bid, large lower demand wick, close above where it opened, almost at the S1 pivot. Good volume on that, good demand volume showing up, pushing it, and now we're getting the breakout higher there. I mean, yeah, I think it's a good entry there. Now let's see here. What else did I have here? We've been talking about XRP. Still looking for this rally. We're holding at support here on the weekly. Still looking for a rally up to that weekly R1 and then kind of a pullback to kind of this area where we're around right above the pivot. And then looking for a breakout higher there. So, I mean, right now I'm looking for XRP to break out higher here and head up toward that, 71, 73, 74 cent area maybe. And look for a rejection around there to kind of bring us on back toward the pivot area. And then looking for a reason along here to break out higher, 80 cents, 90 cents, $1 as it works on that. Let me see here. What else I got? Render, doing what I was looking for it to do. Pulled back here to the pivot area. Is trying to rally off here. Right now, this is an A, a B. It looks like a C is done. If we can get a breakout above $2 and basically 89.90 cents, which is this swing high right here, that would suggest then we're probably headed up toward this $3.76 to $4.16 kind of area, right around that R1 pivot. Again, this is the weekly. Look for then a pullback down toward the pivot area and then a breakout higher to kind of rally up toward that all-time high. I think there. So again, even render looking like it probably wants to push up a bit higher, but we want to see that breakout above that level, above this swing high here at $2.89 cents or so, $2.90. What else we got here? I don't know if there's anything else really kind of to look at the moment. People may be worried about BNB. Actually, you know what? Let's just do it this way. Oh, where are we at? We're over here. Man, that's just a beautiful run up there, right? Hitting right into the EQs right there, right where they're coming together. I'll just add a third chart on here. Okay. But yeah, people kind of worried about BNB here. And then we'll look at coin here real quick as well. I asked yesterday on Twitter, I asked if y'all were buyers of BNB after the drop. Didn't really get a whole bunch of yeses going on, but this looks like accumulation in here with the price action and volume. And so here we are about to break out above the above this 282.70 area. And so that's just blue sky there until we're getting up here at around 299.5. So I would expect if we can pop out above here, I think we would kind of rallying up through this lower volume area here, lower volume node, potentially up there. Now, I could see us maybe rallying up and then getting rejected and then continuing up, but this is the range right here, and we're trying to pop out of that right now. RSI here on the 1 hour is just right there at the EQ. Has a lot of room to still run on it. 4 hour here. Look at that 4 hour. Same kind of thing we saw on the other one there. We have this breakout, this pullback, this large wick, spike of volume demand showing up, pushing us up higher to break out now. You can see that RSI, it hasn't even broke out of oversold yet. This is just the regular stochastic here. I don't know why we got it on there, but it's on there. Let me see here. Hank's favorite is the dip down into oversold on the 12-hour stochastic, but I didn't change the settings here, Hank. I forgot what you said to change them to smooth it out a bit, but I think we'd probably still have the bullish cross there. And then I think Hank waits for the daily to also cross bullishly, which it looks like it's trying to do right now. But yeah, I mean, there's a ton of gap. There's a gap here that just is calling to be filled in. Daily RSI overbought, coming back up. I mean, again, guys, if you're really worried about BNB, you're not going to be interested in buying, but the possibility there. But it is what it is. It's kind of sitting there screaming by me, or at least it was down at the bottom, right? 14.33. Put this in here real quick, see where we're at. Yeah, it's always changing is the percentage K smoothing there to 3. Let's see here. On the 12-hour, we're getting that cross right now with the current candle, another 6.5 hours left in that. And then, like I said, I think, Hank, you can correct me if you're wrong, you then look for a daily cross, right, as well. But yeah, I mean, again, here's the reality of what BNB's gone through, right? So we had the swing low down here in June, rallied up to a swing high here in November, higher low, potentially higher low because we haven't had a higher high yet, down here in December, and here we are rallying up. Again, higher highs and higher lows, hopefully. Higher lows, I said. Okay. Higher highs and higher lows locally here, giving us a high and now a pullback for a low. I mean, it's just all there's a lot of a lot of the market being really interested in areas. So I think again, if we pop out above that 320 area, I think that sends it. I mean, we'll be on top side of this high volume node here, which as you can see is just resistance for this previous support kind of thing going on here, right? So if we can pop above that 320, I mean, I think that opens up for the rally up higher there. Okay, Hank says he only worried about the 12-hour cross on the stochastic only for the upward trending. Okay. Daily confluence after a prolonged move down, he says. Okay, so there you go. But yeah, I mean, I don't think it's terrible here. We got a lot of sideways, a lot of building here of a cause, right? See if we can get this heading back up here and higher. Oh, lordy, what else we got here? Ethereum. Let's look right over here. So I noted previously that we were getting a cross down here on the Stoch RSI, which we did. Broke out, came back, and really we're just kind of retesting this resistance as support. Nice hammer-looking candle right here. Just looking for a breakout higher to kind of send it, I think. Yeah. Looking for a breakout. Really, it's this one right here. It's this swing high right here, which is $2,020. I think if we can break that, we're rallying up. I think you can blindly just long the R1 pivot on the weekly right around 30,000. I'm sorry, 3,000 or 3,100. I think you just blindly long that and you'd probably be all right. Now, at that point, we could see a pullback down toward the pivot, but I think that's a pretty easy long on that breakout. It's what, about a 50% rally there? So yeah. So again, just looking for it to do its thing, right? We're sitting just right below that weekly pivot. So we kind of pound up through it and then right back down, got rejected, right? Dropped up, rejected, came back down, finding support. Just kind of this area right here, right? This previous area support, resistance. So wicks on here, volume down, bullish cross. I mean, looking to get that rally and that breakout above 2020. Potentially send it up to around 3,000. Oh, let me see here. I think that may be it, guys. Yeah. So, I mean, that's kind of where I sit. That's what I'm looking at and why. Again, this just looks like textbook accumulation here, textbook terminal shakeout, small range, rallies back up, so phase A, phase B, phase C, phase D, right here, what we're getting into, phase D, and then we'll get phase E on the breakout here, and we should rally up higher. I don't see any reason to be overly bearish like so many are. So hopefully you guys see that same thing as well, right? If not, hopefully you still continue to come back and listen. I can't do anything about whether you're actually coachable, okay? So that's something I've been talking about a lot lately because y'all come in and, even if you're just listening to somebody for free, right? You still have to be open and willing to, to listen to what they're saying and take that in, right? A lot of times, unfortunately, people, especially online, with trading, with politics, religion, sex, and trading, right? People think that just because they can do it, they know what they're doing, right? Most don't. The question is, are you willing to accept that you probably don't know what you think you know and listen to somebody who's been doing it a lot longer, right? Doesn't mean you have to necessarily agree with them right away, but you have to be willing to listen. I still listen today because I don't ever want to be at that point where I think I know it all. And then, at that point you start falling behind. I like trading. I don't want to fall behind. But you have to get to that point. You have to get to the point where you actually say, okay, I'm willing to listen. I'm willing to be taught. But, again, guys, the other thing is, a lot of people are looking for mentors. They want people to mentor them for free, or they want people to coach them for free, or they want people to teach them for free. I do a hell of a lot of free content out here for you guys. But, I have to look at it in my life, right? Like, I would never expect somebody who spent time and money and effort to learn a thing to teach me for free, right? Why would I demand that they kind of put that out there for free when they've had to spend all that time and take those risks and learn, and the money that they've had to spend along the way, right? And again, guys, this is just to kind of open you up to the realities of just life in general. Again, we go back to what I was saying earlier. Most traders cannot get to becoming consistently profitable on their own. They can't. We see this. We see this day in and day out. But even those very select few that can do it, that end up doing it, still have to pay the time tax on ignorance. So I always view the world that way, and I kind of go, okay, so I want to do this thing, but how, is it something I want to learn as soon as possible and get it going so that I can get a return? Or is it something that I don't care that it takes 5 or 10 years to learn? Almost all the time, I'll say, I'll pick it because, I want to learn to do it, get the return quicker. Because again, that means exponential returns, right? So I don't know, guys, if you aren't thinking that way, just in life in general, with whatever you want to learn, I think you're probably holding yourself back, But again, like I said, most people won't do it on their own, or they can't do it on their own. But they're going to, try and argue that they're the exception, right? You just got to decide what's important to you guys, with your trading, and how much time, is important to you guys. So, whether you ever go through anybody or whether you even come through us, just in general, again, guys, I talk about success and being successful, not just in trading, but in life, right? But you have to make these decisions. And then you have to understand that whatever your decision is regarding this, you're going to be directly responsible for how you do, right? It's not enough just to want to do a thing. You have to figure out how do you do it correctly. I guess that should be the big thing there, right? Bramborg, man, I appreciate the questions. I hope I was able to, make things a bit more clear. Again, the way that I happen to look at the charts, and Fiboswani as well, kind of looks at it the same way as I do. The whole idea of social mood leading social action, leading to what we see on the charts. And I'll be honest with you, it's been probably the single greatest thing, other than proper risk management, that's helped me as a trader. But it's not. It goes entirely against everything that you generally are taught, and most people try and get you to believe. So it's difficult at first, right? It's difficult to let go of things that you hold as truth. Hopefully it helps out there. Coin, yeah, I could jump on coin here real quick. I said I might look at that. Let me see here real quick. I'll just put it right here with the ape one. But again, guys, when I talk about these types of things, there's going to be two types of people out there. One, you're going to take it seriously and you're going to understand. Two, you're going to complain and argue and fight about it and not take it seriously. I'm in no control of either way. I can't convince you however you feel. It's just one of those things you have to figure out, guys. Let's see here. If we look here, this looks like ABC. It looks like ABC maybe. And then it looks like 1, 2, 3, 4, 5. Slightly lower low, capitulation drop. I'm not saying it can't go any lower, but this looks corrective here. Looks like maybe, like I said, maybe an ABC. So maybe this right here. We have here in terms of channel. Yeah, we get something like this. Let's kind of do this right here. And so we got the high down to the lows, right about the high. I mean, these are good movements. If we are, pullback's almost 78.6, so I could see it maybe getting around $43, $43.50. That'll get us just around the low here, which gets us right into, what is this? This is the daily. So we've got some demand right here. Look at that, right there where we're looking at, right at 78.6, EQ of that demand. So, I mean, if it's going to head lower, I can see that, but it doesn't have to. Ultimately, impulsive breakout above the EQ here of this descending channel, you know, right above this kind of 52.60, 52.80 area. Normally, I would expect it to rally up into the resistance, probably around 63.5, 64. Pushing up into that gap should fill the gap. So again, another reason why I maybe headed up there. If we get impulsive breakout above that descending channel resistance, I would suggest that, you know, probably a target up here at around 83.5, 83.75 maybe. But man, I think it just kind of sets it up for ultimately for the breakout. You know, we might get a move up there and then a pullback and then a breakout. But yeah, I mean, I think it's possible we could have this kind of count going on. But we need some confirmation. You know, we need a confirmation. We need a breakout through the EQ to the channel resistance, breakout there above wave B. If we can get above wave B, again, that would suggest that we're heading higher there. If this is 1 here and then a flat here is 2. 3 has a minimum expected target of 136.60. And as you can see, that kind of just gets you right into that resistance right there. We kind of zoom out here a little bit more on the weekly. Yeah, I mean, that doesn't look terrible. I mean, we had the breakout through the descending resistance here. So the rejection pulls down, breaks out, test, come up here, and then, I mean, all we've done is pull back to support, right? Look at that. Support, resistance, support, support, support. So this is the weekly. We'll see if we can get the closer this, the higher up this closes toward the open. Open was 63.38. The closer it closes to that, the more likely we are to see that breakout and head up. So yeah, I think it's making a good potential argument for a bottom being in there, but you definitely want to see some confirmation on those rallies there. Okay. If you could have longed it, you would have there on coin. Yeah. I mean, I think you might even be able to get into some sort of, you know, as much as I hate them, maybe some sort of head and shoulders here, some sort of ugly kind of head and shoulders, maybe. I don't really like it as a pattern like that because that's what it looks like. But I would be interested if I were you guys watching this in this kind of resistance here. It's like an inverted Chuvashov fork here almost. So again, Chuvashov fork usually looks like this. And you're looking at breakdowns, right? So you break down the first one, you have your secondary, you break down the second one, usually indicates you're heading down. Opposite here, right? Break through the first one, pull back, break through the second one, suggests that you're rallying up. So yeah, do not say it. You said it. Yeah, like I said, people are probably going to jump in there and say that, but you know, you saw it. It's pretty ugly, and I would stay away from that. Okay. So there you go, guys. What'd you say there, Hank? Besides, it's always good to have a club of people around you who are actually interested in trading talk. Yeah, guys, listen. Successful traders are generally found at big desks, right? Big bank stuff like that, right? Why? Part of the reason is because they've got a group of other traders around them that kind of keeps them motivated. It holds them accountable for what they're doing, right? We don't get that when we're trading alone. So having a group around you is also definitely a big plus. Again, one of those things I kind of learned throughout the years myself. Remember, guys, I didn't get here on my own. I paid my dues and paid people along the way to help me get where I am. Wouldn't change it for the world. I might have changed my first few years because that was a lot of lost money. It sucked. But once I decided to buckle down and really take it seriously and then start going, okay, what is it worth to me? So yeah. Arrow Quinn, what'd you say there? You watched the BMA update last night, and I can't praise you enough for your experience and knowledge about these markets. Well, I appreciate it, man. Thank you so much for saying that. Again, like I said, we talked about, he's talking about, in Discord. And I talked, I told our members, hey, listen, we could see a dip below, a wick below the S1 pivot on the daily to finish off the decline. And, again, that's where we're at now, right? That was that wick right there, dipped right below. And now we've got this great strong reaction here, right? So even if you bought the breakout of let's say the range here, you put your stop loss below the swing low, I mean, you're still up almost 2R, right? 1.8R. So I mean, it's been a great trade. So we'll look if we can get some more further upside. Yeah, as Hank says, traders are competitive. So working in a group stimulates that. It is, guys. I really mean it. I happen to think we've got an amazing group of people with us. I think probably better than most places because quite a few of our members have been with us for years and years and years. So they're not overly emotional. They tend to pay a lot of attention and talk about things as they should be talked about. But, again, even if it's not with us, if it's with somebody else, find a group of people that you can, trade with, that trade around. You can bounce ideas off of, help keep you accountable, help keep you motivated, stuff like that. I promise you'll be a lot better off for doing so as a trader. All right. So there you go, guys. Running a bit behind here, a little bit over, but man, I really appreciate you guys showing up and your questions and your, everything else. I appreciate you listening to me all this time. Hopefully I've just put out information that y'all can really kind of take in and chew on for a while, at least things that make you think. I can't force you to change your mind. I can't convince you. All I can do, is what I'm doing is put this information out there. But it's up for you to kind of make those decisions about whether you're really willing to listen and consider and whatnot. Okay. As always, remember the only thing you control in the market is how much you lose, right? So, you got to keep working on that risk management, guys. I tell you right now, again, it is the single most important thing that you can do as a trader day in and day out. I believe by itself, it'll have the greatest effect on whether you're successful or not as a trader. Systems, you can all learn all those things, whatever, but, risk management is really what helps move you out of emotion into real trading, right? So there it is, guys. All right. Well, Discord, I'll see you guys over in a bit. Everybody else, I'll be back on Friday, 11 a.m. Central Standard Time as always. And man, oh man, hope you guys just have a great day, all right? So that'll be it, and I will see y'all later. Take care, everybody.